CAI. I welcome all those who have logged in with us today. I'm CA Natasha Gopalakrishnan and I will be the MC for today's session. As you know, our topic of the day is Virtual CFO, Is This the Future? And we are going to explore the up and coming avenues for companies to harness the expertise of highly skilled professionals at a fraction of the cost of a traditional CFO. The virtual CFO, on the other hand, can split his time among several clients to provide their expertise as well. So it's a win-win for both sides. Before I go ahead, let's hear from our committee secretary, CA Sharmila Gandhi.
Thank you so much, Natasha. Honorable Chairperson of BCICI, Ajay Kumar, Mr. Jayaprakash Rajagam, our speaker for today, our past president, executive committee members of BCICI, my dear members, and all the invited guests. It's my pleasure to welcome you all to the yet another exciting session of BCICI. BCICI, as always, is committed to its theme, log into the future. And how? Log in by enhancing the current skills and adding the new skill. And to keep up with our mission, BCICI week after week is trying its best to come up with a session to help the members upskill and reinvent themselves. And one such session is today's, the virtual CFO session. And who better speaker than the expert in the field and the virtual CFO himself for more than 6 foreign companies, Mr. Jayaprakash Rajagam. I was not only amazed while looking at his CV at how a person has to at this young age has expertise in such a diverse field, but was also confused on what topic he should address our members. But then, with our commitment to be futuristic, virtual CFO was best suited for the occasion. I'll leave it to our MC, CA Natasha, to brief you more on the speaker as well as the topic for the today. But before that, I would like to thank Mr. Jayaprakash Rajagam for taking his time and coming and agreeing to be the speaker for today. A very warm welcome to you, Mr. Jayaprakash.
Carmen, thank you so much. It's my pleasure. It's my pleasure.
Thank you so much. Once again, I'd like to welcome all our past presidents who have been mentoring us months after months and helping our committee to give our best. Mentor for this month, and also one of my mentor is CA Kapil Batra. I hope you must have already listened and heard to his interview, which we have casted on the 1st of November. Thank you, sir, for your words of wisdom, and a very warm welcome to you as well. Last and not the least, all our wonderful members who have been attending all our sessions, be it technical or the non-technical, in large numbers week after week. A very warm welcome to you, and I hope you all enjoy this session as well. Before I hand over the control to Natasha, just a few updates on the activities. As we were just discussing now, we conducted a blood donation drive yesterday, and I would really like to thank all our members who came forward to do the blood donation and support our cause. Also, I would just like to remind all our members that the theme of this month, for the month of November, is illuminating the path of knowledge. And I just hope that we bring you more and more sessions which keeps the path illuminated. Another one most important announcement, the date of much awaited and our flagship event, the annual international conference. The date is finalized on 4th of December. As it was already announced by our chairperson, CA Ajay Kumar, this time the international conference is going to be split. It is going to be two events, one day each. And the first event is scheduled on 4th of December. So I request all the members to block their calendars. The details of the event we will be giving out very soon. And another one important announcement is on the foundation. As all your members know, that we were doing coaching on the foundation course for the CA students and also conducted the mock exams. So just to update that the coaching has been really very successfully completed, and it was very much well received and appreciated by all the students who have attended. Also, the mock exams were conducted for the students which have already been completed today. And also, the upcoming exams, the preparation for all the exams are going in full swing. So we will keep you updating on that as well. So that's all for the updates from me, and I'll hand over now the control to CA Natasha to take you forward in the meeting. Thank you so much. Over to you, Natasha.
Thank you, CA Sharmila, for the update and the summary. Now for a brief introduction to our speaker of the day, Mr. Jayaprakash Rajangam. Mr. Jayaprakash is a mentor on finance and governance. Amongst his vast and impressive experience is finance and risk management with more than 18 years experience focused on enabling entrepreneurial-led businesses to grow and serving as a virtual CFO for Indian businesses of more than 6 foreign companies. He has also assisted foreign companies and Indian startups in formulating and implementing India-focused business strategy. He is also a regular speaker at our motherlode, ICAI, among other prestigious institutions. I'll hand over the control without any further delay. Before we begin, I would like to remind everyone about a few quick house rules for a smooth session. Please send all your chats, all your questions through the chat, and please remember to remain on mute so that there are no disturbances during the session. I now invite Mr. Jayaprakash to take us through his experience.
Thank you, Natasha. Thank you, Sharmila. Thank you, Ajay, and good evening, all of you. I again start off with apologizing for the delay, primarily on some technical issue at my end, which I'll figure out in due course. But having said that, it's also very humoring on a Saturday evening to hear about one's own self. So yeah, feeling a bit elated to hear about myself. But this conversation is not about me or per se my achievement. It's more about the experience that I can share with you that I have gained over the last 18 years. Thanks to my mentors, thanks to the institutions which supported me over the years, whom I owe my existence to, professional existence to. My submission is that I'm obviously going to share a particular presentation which I had made specifically for the session, which will now be seen in your screen. This is only a pointer. This is only going to be facilitating us to have conversations, and I strongly encourage open dialogue where each one of you can post in your queries or your thoughts on the chat box. And I'll pick up the thread from there, and we can discuss, deliberate, or we can try and build up on various questions that we see in the session and otherwise. So that's broadly what I would want to request. And yes, one final personal submission that was on the professional side is, my name would give it up fairly well that I'm South Indian by lineage. And South Indians generally are known to speak very fast just to demonstrate their command over the language. So should my genetic issue come somewhere in the conversation, stop me or ping in the chat session, and I'll recalibrate the space at which I speak. With that, saying that, I'll get it specific to the topic. Where is this all coming from? So if you are asking me way back from early mid 2000s, there's a lot of noise about outsourced practice on accounting related matters. In fact, the firm that I was working for, we did extensive research way back in mid 2000s, and we did figure out that there is a large appetite for India-based business processes, specifically around finance and accounting. We know the Genpacts of the world, the large big boys managed to set up a lot of F&A. They call it F&A shops, shared services shops. That's how the technical term for that particular space evolved. But the full-fledged movement towards a proper full-fledged CFO function was not visible. We did find that space was relevant from Indian perspective. I'm primarily largely speaking from Indian perspective at this juncture. I'm aware that the crowd that I'm speaking to now is largely of professionals who are based out of locations outside of India, but have some keenness, or would examine how India would look from a professional context. So, that's the whole idea of trying to say India specific examples. But at any point in time, you can jump in and try and bring in a specific tangent that you believe needs to be examined. But having said that, But we did find at that point in time that there was a space available for someone to give the whole gamut of services, resulting into what today can be called virtual CFO. This space came from a lot of mid-market European companies where we were active as a firm, very active as a firm, having bases in India, but they were unsure about whether they should depute their own people. If they depute, the cost structures were going dynamically up. So obviously, they are using their own resources for India was becoming logistically as well as economically unviable. That's where my firm stepped up in, and I was specifically leading the initiative where we offered a full one-stop shop of what today we call as virtual CFO, right from basic accounting onwards to aggregation to audit to even regular reporting and business analysis. So in my introduction, Natasha did mention that I was helping companies on their India strategy. So the idea was to add on those layers, and we'll try and explore what those layers are in a very short while. But the reason I'm sharing this is to try and impress that those are the kind of learnings that I'm bringing on in these conversations, and that's what I believe is going to further and further expand, which is the trend that we are observing. The prompt on the screen today, that there are increasing regulations in India. We might go higher and higher in ranking of ease of doing business. But resulting impact on business itself, compliances or reporting, is quite a challenge. You look at also most of the contracts today international flavor, thereby international contract terms, again, which requires nimbleness and agility and awareness. This is something which I can surely say most of the participants here would be very, very conservative with, given that you are sitting out of locations which largely feed on international businesses. Bahrain's economy or largely would have many international influences, and thereby your contracts would have indeed connect to one of the other countries in the world. So in India too, obviously, most of the contracts now are international commercial terms, and thereby it brings its own complexities. Multi-jurisdictional taxation, which is less spoken, but yes, in Bahrain's context or Middle East context, taxation is new. GST, for example, in the UAE came lately. Bahrain also is experimenting with its own taxation rules and laws. But in any other jurisdiction, it's only getting more and more wider ramification. And tax authorities and tax consultants are getting very poetic. Poem as one of the concept. So it's kind of enhancing its own impact on the businesses, which are all long-term in nature. Foreign exchange interest markets, commodity market, all of these are extremely dynamic today, which is again a challenge. We all know that to the point of the oil going negative in the near month when the settlement of contracts were happening. So it's that dynamic that people are responding, and there is a real-time impact on prices and how companies can respond to the prices. So extremely dynamic financial markets. And the last, we have 2 points, but the last point is just a resulting cascading conversation. But the one is extremely short product and business cycle. This is the core here, where when you start looking at any business, a maximum runway of 18 to 24 months is available for them to ideate, introduce the concept, ramp up and scale up, and then deliver into the marketplace the growth that they believe they can achieve. So extremely short product cycles. So if you go back and look at every new product that we are talking about, today's latest favorite is White Hat Junior, right? White Hat Junior. Obviously, most of you who have kids or who one or other, you know that in about 20 months just to market again. The owners of White Hat Junior had introduced about $11 million into the company as capital, and in 20 months they took away $300 million. So in 20 months, 11 million becoming 300 million. That's the kind of short business product cycles that we're talking about, which means businesses have to be really nimble, agile, and continue to engage and grow. Thereby, entrepreneurs are becoming very specialized, and which is what I'm saying. Cascading effect of all of this is an entrepreneur today, if you discuss, he's extremely focused in his domain or what his area of expertise is, and he's always looking at someone to partner him, to work along with him to build the business idea, to scale the business idea. So that, given that logic, if one looks at it, we specifically examine how financial management is going to be impacted. And that's a couple of points I've already iterated, and in the interest of time, I don't find a reason for now again re-examining. But the last course input there is, thereby finance functions have to now be integrated with the operating functions. You can't look at finance as a distinctive, independent function. A complete integration is required. How, why, what is what we'll speak in a short while, which is what we're going to spend a lot of time on. That if we are talking about virtual CFO, essentially virtual CFO is delivering financial management ideas to the entrepreneurs, and thereby the long-term trends that we spoke about resulting into the financial management issues of quick decision making, data availability, consistencies which are being articulated, is all now upon the virtual CFO to ideate and implement, which is where the philosophy side of conversation comes in. When you say philosophy side of the conversation, as a virtual CFO, how does one visualize a business? This applies to a CFO in the normal sense too, but more so in a virtual CFO environment, where earlier a large section of what a CFO was expected to do was around business results, which is reporting, largely reporting. But today, as I said, the whole world is now being agile, short business cycles. Now we are trying to look at the finance function now driving business results, which means they are integral and core to decision making. And how will one achieve? How does one achieve? That's something which we'll try and look at. And this is the gamut. So if I have to, in one pictorial representation, present what is expected out of a virtual CFO, this slide kind of captures it. It's not my slide. Let me first articulate that. I loved this slide and I picked it up and put it here. But the concept is so beautifully captured in just one slide as to what is expected. It starts off what more or less in early 2000, as I was saying, trends we observed, where basic things around processes, policies, transaction processing, all of them was done, that is accounting in nature. A lot of this was done outsourced, offshore, shared services, and all of that. That's accounting. And when I speak at the institute, just to add the relevant tangent, I speak at the Institute of Directors Forum, and where more or less and the participants are all directors and senior management people. I end up saying, and they agree more or less, is that if you look at typical CFO, is more a glorified accountant than a finance guy. The ability to transit from being a glorified accountant, which means largely looking at the light blue boxes there, into the next basket, which is the dark blue, and finally moving into the yellows, is where the transition of a CFO comes in, and more so virtual CFO, because the fact of virtual CFOs is addressing a marketplace which requires this larger gamut. And that is what we are going to look at, largely saying that accounting is done. That's process standard. I'm not undermining any of this. And most of us would know it, so I wouldn't want to spend time on it. People who are further interested, there is a WIRC's very recent publication on this. I was mentioning to Sharmila and Ajay also when I was on the call with them. The very recent publication of WIRC around how shared services or accounting businesses can be set up. More or less, most of you would have those exposures or experiences of setting up an accounting shop internally in-house for a company, or working for a CA firm otherwise. So that's something which, and we can take up the question subsequently if based on the responses. But moving to the next segment is where the beauty is. When we say finance, thereby largely comes the intervention around planning, strategy, and engagement with the stakeholders who provide capital. Here is
excuse JP. Prakash, I mean,
call me JP. That's the best way.
That's
I'll go.
Sorry.
I'll go a little bit. No issues.
So just members have that. Can you be a bit little slow? Maybe there is some listening. Yeah. Thank you so much. I'm sorry for interrupting.
Not at all. Perfectly fine. And it's rightly so. There's a back of the mind, I lost 30 minutes in my technical problem, so that also works, but I will surely slow up.
No, that's fine. That's fine. Yeah.
Yeah. So what I was trying to articulate is that accounting is something which more or less most of us understand. That's where our alma mater has trained us a lot well. But moving into finance, yes, we were expected to be experts in 7 different disparate subjects to qualify as a chartered accountant in India, and finance was surely one of them. But bringing on into application becomes a challenge. And this is the space where maximum value is added, because who goes for virtual CFO? And here I pick up some random questions which were posed to us through Ajay. It came to me where someone had posted a question as to how does one decide what is CFO's scope? How does one decide what happens from a virtual CFO's context? So here is the challenge, that if you start examining the regulation in India, for sure, and other jurisdictions we can examine, it says that any company, listed company, they need to have a CFO dedicated. He becomes a key managerial personnel, and thereby he has to be dedicated. He can't take employment, or he can't earn any from anywhere else. Or any public company with more than 10 crores of paid up capital also needs to have a dedicated CFO who becomes a key management personnel. Now, this clearly then brings out a logic that if the larger, bigger boys will need to have a dedicated CFO and thereby a dedicated finance practice. So that's not the space that someone is talking about. Offering virtual CFO there as a service will not be relevant, cannot be palatable. What can be offered is one of those process related efficiency. So if you actually go back to WRC publications, they are in fact quoting about 25, 26 case studies in which a reasonable number are indeed those which delivers process efficiencies and not a virtual CFO package. Now, which comes to a question that whom are we addressing? Which means largely the address whom we would address as virtual CFO are the mid-market guys, are the emerging startups who require these capabilities. But along which means we are looking at helping them first articulate or strategize how to fund their business, how to fund their working capital specifically within their business, how to then look at targets and operational issues around finances, which is where financial planning analysis, the first 4 boxes which are in dark blue highlights. A large section of the early startups and mid markets, as per my experiences, I've been in this space for now, dedicated in this space for about 6-7 years myself, because prior to that I was working for a larger firm. So larger firm has its own set of challenges when you when you have to serve as partner. But as an individual practitioner for the last 6 years, this is the space where we work with startups or mid-sized companies. The maximum emphasis is on, because most of you would be from India, obviously. So it's typically India runs in a Lala company mentality. Due respect to the Lala sitting somewhere, yeah. So largely the finances is controlled by someone within the family, controlled by someone within the known circles, and thereby trying to bring in the required discipline or orientation to consistently deliver is always a challenge. That also results into the reason for failure. So thereby, this section has a lot to do, and I'll give you one of my examples further to emphasize on this. One of my clients who was trying to help, I'm not here naming, and I'm not trying to talk about specific about achievements from my end, but more so the key learnings which came. Typical startup, Bangalore-based startup, technology guy, doing amazingly well on the business side. I add the required capabilities. First generation entrepreneur. But he went out scaling and expanding without thinking about financial consequences. He could continuously show his top line growth, and he obviously was also demonstrating about 8-10% margins, which was okay in his business when it's growing. But he still was continuously having a finance challenge. But there was no planning, no budgeting, no cash flow understanding exercises. But clearly the accountant who was serving him was doing the regular reporting, so on and so forth. But then comes the question. So obviously there was intervention he expected from my end, and when I looked at it, something very elementary, elementary Watson, as they say, happened to be wrong in his business. He was doing one segment of business which was largely technology trading, where the margins was as low as 7%. And the TDS in India, if most of you actually be aware of TDS in India was 10%. So what does happen is, for every revenue, 100 rupee revenue recognition, he's actually losing out 3 rupees on working capital. That's as simple as that, which means on book you might show profits, but 3 rupees is continuously getting drained out as taxes, the cash flows, which might happen 24, 36 months later based on the refund cycles that the government of India would come up with. And thereby he was having a massive financial crunch to the extent of possibly having to fold down. We brought in some corrective measures, which is where, as accountants, more so chartered accountants, not accountants per se, but chartered accountants who have the awareness of tax, who have the awareness of finance, who have the awareness of audits, accounting, the ability to bring that logic helps a lot, because it helped him unwind a bit. You can apply for lower rates of taxes. You can, you can try and structure your own business differently, where you don't have to be exposed to 10% reduction on the whole gross amount. These are the various possibilities, which obviously we are not discussing cases, we are discussing the logic and the gap in the service. So typical accountant today, whoever advises a company who's doing chartered accountancy, audit work, who also doubles up as a financial advisor, generally fails to look at this because he has multiple clients. And I have written, in fact, a blog that if you finally look at Indian practice, about 150,000 accountants at best control something in the order of about 50 to 60 lakh clientele. Now try and look at the magnitude of the problem of how much each practicing chartered accountant, how many clients he can have and how well paid they could be, so on and so forth, which means their bandwidth to deliver becomes a challenge. Now, which is where we go back to that there is a clear space for virtual CFO, and a market surely understands. And India becoming the startup hub, there is incremental, demand for such businesses. I do see a couple of questions cropping up in chat session. I'm going to just look at it. Yeah. So the question that I'm seeing here is CFO experience in specific industry sectors are invaluable. How will virtual CFO meet the parameters when they have to cater to diverse sectors? This is a very specific. I respect that question, Mr. Narayanan, and my response to this is as follows, and which stems from our way we have been trained as chartered accountants. When we are talking to a client, all that we might say is great industry specialization, I understand industry domains, so on and so forth. What our core strength is indeed our ability to understand accounting and finance. And if we all know, when deep down the concepts are very similar, return on equity being the primary driver of financial decisions. Return on equity can manifest as return on capital employed, net worth. Various manifestations of return on equity can happen. But having said that, the logic is very straight. Irrespective of industry domain, those logics are sacrosanct. And thereby, when I pitch, let me share my own experience. I have never had any failure in that aspect. When I'm speaking to a client and the client says, I am from this industry, I am from real estate, I am from technology, how will you help, so on and so forth, I would say finally the financial logic will not change. If someone wants 16% return on equity, he will expect 16% of equity. You have to now work towards making that happen within your industry's reality. So if the moment people start claiming sectoral so-called specialization, there's nothing wrong with it. But then at the end of the day, what are the complex? The only exception to that would be financial services, where it's a very different ballgame, and surely where we will see that the latest to become Mr. Sashish Adishan, who's a chartered accountant and who has become the CEO of HDFC Bank. He toiled years and a very hands-on guy. He was a CFO and very hands-on guy. I had multiple conversations with him and loved every bit of it. So what I'm trying to articulate is that there's a specialization required, because financial services is a very niche domain. But any other domain, based on my experiences, I would have personally possibly consulted with about 25 different broad sectors within which multiple subsectors are, and I've never had a challenge to be able to engage with client and deliver what they wanted. So I don't find a reason why any one of you should also harbor that industry specialization becomes a constraint to approach a client. Rather, you should say, I am finance specialist. My ability to understand your business and guide you is what I'm bringing on table. And that is what you should be able to evaluate. That would be my submission, and it works subject to obviously your conviction in your own statement. So with that background, we bring back the conversation into saying, which means you are going to interpret client's specific requirement based on his briefing of the business. You're going to interpret that and render him a financial planning and analysis strategy. So this starts off with budgeting, and then it goes off with controls around budgeting, and then moves on to analysis of variances, which is what, if you see, is articulated as variance analysis, disclosure, budgeting and forecasting, decision modeling, business case analysis. These are all budgeting and corporate focus. So all of these are core and key. And today, if you ask me, this is not done effectively. The next one, if you look at it from there, moves to the next beautiful zone. And the next beautiful zone here is around the actual fund management. So if you look at the light blue, the purple, no, sorry, my color is bad, but you get the treasury investor reporting relationships, that next segment, this is where the further scaling up of what you're offering to a client improves. And this all, as I'm saying, all of this can be virtually done because I'm sitting out of Mumbai. COVID time, 7 months at home, but my work continues to be delivered at the same pace across clients who sit in various parts of the countries. So that's the limited. All that I'm speaking about can be done from wherever you are. There's no challenge. We can try and speak about specifics in a short while if someone has a question. But what is this next section we're talking about? The next section is around helping these mid-market companies access the right set of capital for them. Now, when we say right set of capital, which means generally it's always associated with debt. And here comes, again, I would say us as chartered accountants have to up the game here. And I'll give you a couple of examples on this side. So typically when you look at trying to raise debt funding, and the question I generally ask here as a leading prompt is, whom does banker fund? And the answer generally after whatever conversation would be, it comes out to a result that bankers fund people who don't require money. Now, when I say that, it would sound counterintuitive, because when a banker is funding someone, he's asking for collaterals, personal net worth, personal guarantees, so on and so forth. And as a chartered accountant, when I try to evaluate this and you start examining these conversations, the whole idea was we were all proprietors way back in 1700s. Proprietary, which would mean unlimited liability. We wanted to then try and see how to stop unlimited liability, because obviously I don't want to go down completely if my business fails. So then the partnership logic came, where we said colloquially in a Hindi context, "Akela nahi jaunga, 10 jan ko leke jaunga," right? So then partnerships came in, where it was unlimited liability, but there was a lot of people sharing the risk, which again human ingenuity said doesn't work out, because I am as an individual not defined by my business. If my business fails, doesn't mean I'm a failure. Businesses are prone to cycles. And that is why the next variation came, which was limited liability entities, which could be limited liability corporations, so on and so forth. Now, once you start traversing this whole journey on the finance side as to how you fund your company, and then once you have a limited liability company, an LLC or an LLP, and banker asks for the personal guarantee of promoter to fund the company, essentially it is a debt and it is unlimited liability debt. Now, these are functional issues. Why? Again, because at the SME side, so when you're trying to advise a company from in the early startup phase, this is the beautiful quandary that SMEs face. And what do they face? That I want funds for my business, for which I have to give personal guarantee, else the banker doesn't fund. What do I do? So I might incorporate a company, private limited company, but I'm still having an unlimited liability. The whole purpose is defeated. So what can you as financial advisors, accountants, which is CFO function, can bring into the question? And there are various ways that as finance guys, one can come up with, the multiple things, factoring, forfeiting, where are the new so-called genesis. But within traditional debt too, there are multiple ways that you can protect the SMEs. This was done, as I said, I've done this all for my clients. And just to tell you today, over the last 5-6 years, there have been multiple conversations. Even bankers realize that there is a challenge that asking personal guarantees. Thereby, they have come up with products with higher yields. About 18% in India, they charge for complete unsecured business loans to companies. So essentially, the promoter doesn't give any guarantee of any nature, but the interest rate goes higher. Why is this relevant? Is because if after providing collaterals, a typical businessman in India still pays about 14-15% interest. So typical counter to a SME, which is what I'm saying, as chartered accountants, as advisors, we can bring in, which is where space is completely blank. People are not doing much. Is you can advise that if you're so gung-ho about a business plan, if you believe your business plan is amazing, which is what most of the entrepreneurs will do, then an incremental 4% interest payment should not bite you much, because your plan is so great. If your plan is not so great, then even at 14% with your collateral, the business will not function. It is not a solution. So these are the kind of interaction which, when you, I'm just giving some excerpts, there are multiple such complexities. Unfortunately, this is a forum, I'm not sure that I'm recorded or not, but with due a sense of responsibility, I'm saying a lot of our own fraternity member end up advising something as stupid as saying pay TDS and GST later, because it only is costing 1.25% a month, which is about 15%. So delayed. I have heard this innumerable times, and I find it the worst advice that one can give to clients. But having said that, that's happening, and this is where at least people from outside of India, when you come back or when you're looking at engaging with Indian companies, you would have exposure to these kind of possibilities. And not a great thing to do. Advise clients to not be compliant and pay government dues, because it has multiple different issues. So that's something which I wanted to articulate, and that's the section around investor reporting relations. So what does typically a CFO do here, a virtual CFO do here? He connects the businessman to people who have the relevant appetite to invest. Now, this is a very highly specialized work where you're continuously speaking to angel funders, venture capitalists, specialized funds which are set up for specialized industry domains. It's a highly specialized one. So obviously here industry specialization can help, because there are dedicated capital providers, because the supply side is dedicated. It's not to do with the business, it's the people who supply capital, they are dedicated. So there a bit of specialization of, there are venture capital only looking at fintech, there's venture capitalists only looking at ed tech, so on and so forth. So obviously their network needs to be built up, and that's the section which most of the clients love, because you are able to engage with them. Relating to this is also the advice that they seek when they're raising the money itself. So you might not have the so-called linkages, there might be external investment banker who would advise, but again there's a big gap here in terms of bringing in the checks and balances. I'll give you one example here also. As a chartered accountant, we all know that valuation essentially of a company is based on what is the last traded price, so to say, or the price offered by an investor. But that is not the complete picture. That is a Yudhishthir ka jhoot, if I may say. So when I say Yudhishthir ka jhoot, is I borrow from the Mahabharata analogy, where we all know the story where Yudhishthira said Ashwathama, the elephant, is dead, and elephant was looted. Same here. I have seen venture capital funds which are funded by Government of India, just to give you a sense of how it works. Government of India, and what finally they say is, here is, say, let's say 3 crores for what is worth, and I'm investing 3 crores for 20% of your company. Now, which is a very simple thing, right? So he gives you to 3 crores, 20% is the stake that he gets, which means 15 crores is the valuation of the company. This is typically how the so-called conversations with venture capital happen. But there is an asterisk there, and this is where the CA comes into picture, and this is where our grinding on, and I really love the way Institute was when I passed out, for sure, where it grinded us on Companies Act, it grinded us on Tax Act, a whole gamut of things which comes into picture straight on to this. So there's an asterisk which says, even 5 years, the company cannot give exit at the rate of 21% IRR, which means a third party buying away the venture capital fund with 21% IRR. The promoter is personally supposed to buy back. Now, which the moment this asterisk comes in, so you have, and these are all, I'm saying these are things which I've seen, I have documents, I have negotiated such things on behalf of my clients. So I'm only trying to articulate this space, and there are so many companies who took funds with this clause in there, and subsequently they realized, which means it's a debt in the garb of equity, because if there is a exit less than 21% available in the marketplace, the venture capitalist will still come to the promoter and say, you have to buy at 21%, which means the promoter himself is exposed to a 21% fixed cost. Now, these examples are primarily to tell you, and I'm telling, there are umpteen investor companies who invested with the structures, and the chartered accountants failed to advise, or the investment bankers who are advising they failed to advise, and it finally, now it is all coming up for arbitration in various cases. A lot of problems happening in India in this context. So again, there is a space. So people who understand international structures, contracts, so on and so forth, which is essentially our CA grounding way back, bonded labor, as we used to call, for sure, for articleship, but was surely relevant, because all of this came into picture when we did work at that time. So that's a very lovely space where one can add a lot of value to the entrepreneur, and this has an impact on the question that was posed. Again, I go back to a question that was posed. The question was, how does a virtual CFO get remunerated? And I will address, if you just keep this in contextual mind, and I will address that question shortly after getting to the last space. And the last space is what we're saying, others, where the integration with operational function happens. which is where we're talking about how the CFO, virtual CFO, has to work with the legal context to protect the risks. So here the risks come in: sales and operations to protect the working capital cycles, HR to protect it from the context of labor issues, labor costs, and so on, which is all self-explanatory. So that's the segment where you're talking about the last leg where efficiencies come into picture. So the first segment on the left, accounting, was more process, standard accounting deliverables. The mid section is hardcore finance, which is what essentially every entrepreneur is today underserved in, and people can gain out of it. The last section is, if all of this is done well, then you move into efficiency space where you are allowing the business to get more and more efficient to deliver. So these are the ranges of things that is delivered. I'll just try and pick up a few questions. I can see 3 or 4 questions here of comments here. Is the increasing expectation of CEO to be business driver not a trap for finance function to focus more on ensuring business reports? What the CEO wants rather than working for true and fair view? Okay, I'll pick up that question, Mr. Batra. With in response, I have this next slide here. So what is that CFO is expected to deliver, and from different points of view? We are in an integrated world for sure, and thereby as virtual CFO or CFO, we are expected to be partners to various segments of business. The partner is obviously CEO. The partner is other key executives like the chief marketing officer, chief HR officer, so on and so forth, the finance team itself, and the board. So these are the various levels at which, and resulting into the question, is increasing expectation from CFO not a trap for finance function? Now, the finance function increasing expectation can never be a trap, because finance is at the core of. Finally, why is the business being done? To make money. Let's have no second thoughts on that. Right? If money is to be made, then finance has to be at the center for everything, which means finance has to be the core, has to be the center, and which is what I end up saying in all my interaction with board members in various forums, including my consulting and speaking engagements, that the board has to empower finance to sit right in the center. Right? On a very different tangential note, but still relevant contextually, I would say from a philosophy context, a CFO is primarily doing a Narad Muni's job. If people understand this, so-called contextual relevance, Narad was a sage who's always saying Narayan, Narayan. He hears gossip from one place, goes and gives it to someone else, and thereby creating ripples or creating certain kind of activities in action. He was getting actions done by insinuating, by sharing, so on and so forth. Typically, finance function, if you also see, it has a lot of this, similar threads, where essentially the finance guy is going to sit with HR guys, marketing guys, operations guys, production guys, the whole of them, and try and understand and try and insinuate them to try and reach the objective of the organizations. And that's not, it's a lovely thing to do, and which is which is expectation appropriately, because finance is the common thread which binds everything, and we cannot understate the importance of finance. Rather, finance should be the center of all functions. Everyone should be financially oriented, and finance team should be enabled to interact, intervene, and facilitate. The last point being important, facilitate. It can't be intervene and stop or constrain, but facilitate, which is largely driven from a philosophy angle, which is what, if you look at Narad also, he was facilitating, he was not constraining. To address that question more specifically, true and business reports are only one small function. Reports are of no value if it doesn't get into action orientation, it doesn't get into decision orientation. So reporting is important. I am not negating that, but that is not a core finance function. That is if you say that is more a chief accountant's role, not a finance function's role. Finance function is enabler for sure, which is this couple of slides back, which I was trying to say. I'll again bring that on board here. From reporting on to driving business, this is the transition every CFO, whether virtual or otherwise, needs to surely travel. The next question that I'm seeing here is beyond but CFO has to be contributing in every area of operations. So CFO is jack of all trades, and that's the reason perhaps most CFO go on to become. Yeah, that's what. So it's a fair observation, and I would say yes, that's relevant. That's something. So you should look at. So now next question is, so what is the role of virtual CFO on these examples you give? Okay. Now here I'll address this question specifically by saying that every client has different requirement. and thereby you cannot have one standard template of agreements with clients. So depending upon maturity of the organization, you will have to bring in the right. So at the end of the day, what I suggest if you are looking at wanting to do a virtual CFO practice is engage at a strategic level, which means you will say finance, account, administration, compliances fall into your domain, into your activity zone, right? Which will take precedence will depend upon specific analysis of business maturity. So you will say this is a larger gamut. We might first want to put processes in place. The next we might want to look at funding in place. The third thing might be efficiency in place. So that path can be defined by you as someone a CFO. But the first thing is onboarding and getting into a larger strategic engagement where you are onboarding the client for your capabilities to deliver what is required. That's my submission. Again, from the background that I'm speaking to segment of people who are sitting in Bahrain, who are possibly examining to become entrepreneurs or advisors themselves. So do you require to have a bandwidth or battalion of people to deliver the virtual CFO? Let me again articulate here. I am a single person consulting company at this point, and I have no forms to accept that. I'm a single person consulting company as we speak today, and I've been this way for the last 6 years now. We don't require a battalion. You can still be extremely relevant because what you're trying to say is your interventions are specific, and that is what needs to be valued. If you add the bandwidth lower, nothing wrong with that. So you'll add a lot of interns, a lot of business analysts. They're only going to do the grunt job. So finally, you as a virtual CFO will need to evaluate that grunt job or take responsibility for them. Nothing wrong with that, which means your own charge-off rates, your own recovery rates will go lower. So you have to know what positions you want to take. Are you looking at taking a position where you're saying, I am going to come in at a very specific level of giving you intervention which ups the business? Or am I going to take care of all your headaches on the accounting finance side? Both are doable, but the recovery rates and the earnings and profitability, because time is inventory for professionals. Every hour you spend on a specific engagement, if you don't recover, time is a inventory which just vaporizes, and thereby it reduces what could be your financial offtake. With that background, I would surely articulate that be clear on what you want to deliver. So there are people who are amazingly good in delivering accounting related processes and financial reporting. So a combination of the first large light box and investor reports and board of directors reporting. So they can just pick up that and say, this is my specialty, I'll offer this, and clearly tell the client that I don't want to get into anything else on business modeling and decision making, because you believe that's not what your forte is or what you want to do. So a specific intervention can be brought at that time. What I'm trying to again emphasize here is there is a marketplace out there for dedicated service professionals for core of each of these elements. I generally, for example, in my own case, I only pitch in the mid blue and to some extent on the yellows. I always advise clients to have their own team to work on the processes. Just to clarify that, it works beautifully. Client loves it because he has a daily conversation with the accountant who draws up checks. I don't want to be spending time saying which check needs to be cleared or not cleared. That's an extremely specific, very normal conversation. My interaction is generally in this in the mid one and the right yellow one. That's what I would want to talk about, or what I, based on my strengths, I believe I can do. If people have different strengths, you have to find what your strengths are. How do you expect maturity from entrepreneurs who have just started and are starting their businesses? Oh wow, a fair question again. And I would surely say maturity is lacking, and that is why a lot of time goes in creating the buy-in. If I have to again confess here, it takes about 3 to 6 months for me to actually onboard a client. Again, I'll specifically highlight the problems of this domain so that it's always good to say it's a very good thing in the wide space. But let me articulate this different way. How is a virtual CFO generally going to earn? And from there, the risks and issues. So if you're going to typically pitch yourself as retainer model, where you're saying monthly I deliver ABC reports and monthly is what you pay me, the client may not have the wherewithal to pay in his initial phase or in various cycles of his phase. And thereby you might outprice yourself. Okay? So thereby comes the point that you are not technically partnering him, you are only taking your Shylock's pound of flesh, and so he may or may not be able to afford you if the cycles turn a bit here or there, or your cash flows get deferred, so on and so forth. And that's one side of the reality. But thereby you have to choose clients who you completely believe in. Typically for me, in my experiences, I would evaluate about 25-30 clients first, and finally choose upon 2 or 3 with whom I work for about 9-12 months to bring them to a maturity, to work along with them. They don't have the maturity. But the first 30 odd clients or 30 odd referrals which comes to me have to be evaluated. You need to know with whom, which entrepreneur you can work along with, you can guide him, or who's ready to be guided by you. It's all very, very intense. It takes time, but I can surely tell you the end game is lovely, because when you are able to onboard such a client who is ready to hear you, whose buying you have, the process becomes simpler. What you advise gets implemented, the success rates improve dramatically, and thereby then your earnings also is related. So you can always say your earnings could be a percentage of funds raised, percentage of valuation increase, percentage of profits. Thereby the amplification of what you earn becomes dramatic. So it will be, I completely agree with the statement that how do you expect maturity from entrepreneurs? The idea is you don't expect maturity. Even Vijay Mallya didn't have maturity. If you all, I love the web series Bad Boy Billionaires, and I would recommend others also to see that. Bad Boy Billionaires. We can't expect maturity from entrepreneurs. Even seasoned entrepreneurs are prone to errors. So many examples. What only works is when you are advising, do you have the relevant buy-in from your client? Is your client ready to listen to you? So what also happens is you should have 3 or 4 clients, because 1 or 2 clients will surely at some point in time change. See, mind is a monkey, and there are various people giving various kind of advices, and thereby it becomes a challenge to maintain equanimity. Again, I quote from that Arjuna had submitted to Krishna, saying that you are my guru and all of that. So, and the whole Bhagavad Gita is about that, right? So the first 5 chapters about Bhagavad Gita was largely about Arjuna questioning Krishna, and Krishna just giving response as a very third party, uninvolved person. The 6th chapter is where Arjuna surrenders to Krishna and says, hey, I am yours, you make me do what you want. And that's the time he gives the Vishwarup. Why am I trying to say this is, look at similarly human beings. I'm not saying advices are Krishna, that's not the intent. I'm saying that's how human mind is fickle. Despite the Vishwarupa, despite showing all the ideas and making Arjuna realize the magnanimity of who he was with, still when the war came in, he was still not ready to fight Bhishma or Dronacharya or kill them. And Krishna had to every point again take his Ugra Roop to insinuate him to act. So again, this is the same thing where you might onboard a client on day one, but there are multiple, I have faced this multiple instances where the client is onboarded, he completely buys in, but their mind is a monkey, it starts wavering. So thereby you as an entrepreneur who is advising also need to have at least 3 or 4 different baskets where continuously advising. So if someone goes off the top, you are not losing your complete time. And early startups can't pay high, let me tell you, and thereby your cash flows primarily comes from the success of delivering the ultimate valuation. That mindset has to be there to play the longer game, and the longer game is at least 18 to 24 months, if not more. It's a long game, but it surely is a very satisfying one. Again, let me share that because this is public information by now, already they delayed public information. I worked with a client, and last year Larsen and Toubro Infotech bought them. For again a young chap, not 32 33 years of age. He invested a lakh of rupee, worked for 4 years. I worked with him for about 2.5 years as virtual CFO, and he got 100 crore valuation. It's in the public domain. So that's the kind of transition that you can make for clients to work on. So that's so I'm just going to look at further. There are a few more pointers that is coming in. Is there a structured place for looking at virtual CFO opportunities, or is still largely unstructured stage? You can add value as virtual CFO the way I'm articulating, right? So there could be a well-oiled machinery. If there's a well-oiled machinery, what's the role that you would play? Very limited. It has to have problems which you can go and set, you can add value and to come in, and thereby someone would respect you for the same. So my submission always is that a client which is unstructured is the best client, provided you get the buying. And how can one reach out to this? There's an amazing network of people. Lawyers, trust me, are a great set of enablers to have on, because lawyers will not come into what accountants do. And lawyers have a range of clients, because right from setting up, while we might say CA we set up, but lawyers do a lot of work, and they have a lot of network out there with private equity firms, with venture capital firms, with early startup fund, stage entrepreneurs. They are good network to recommend and thereby give intervention. Just for people who want to see how to build businesses, lawyers is surely a great place to start. I can tell you there are a lot of incubating centers also. IIT, for example, it was a big eye opener for me. From early childhood days, we all know, for example, Eureka Forbes came up with this so-called water purifier, yeah, which we all know, the candle technology. The candle technology is an IIT Madras incubated company, and that company gets 1 rupee royalty for every candle even today. That's the that's the kind of number that it is. That's about it. So what I'm trying to articulate is there are such multiple such places, and they are always happy to invite experienced professionals to advise their companies. Again, a great place to try and pitch or try and make difference to the relevant people. So that's the that's my experiences, very broad experiences, but you have to be there, seeing the marketplace, speaking, networking with these bunch to try and get more and more leads. Qualifier leads, what I'm trying to say is you get dime a dozen leads. That I can tell you again. I would get something like 30-35 leads every month to qualify. There someone wants money, someone, so on and so forth. Ability to qualify and choose the right client is extremely important. Getting leads is the least of the trouble. Your ability to choose the right client becomes the most important one. Right. So that's around few questions that I saw, but I'm just going to quickly scroll through. I'm conscious that we are at 7:56. I have about 4 minutes to wrap up based on the original timeline. I will try and stick to the timeline, and if there's an extension required, or if you believe we need to chat, I'm always happy to, but I need to respect people's commitments. So I'll quickly pick up the questions that are there in the slide, which came as a heads up through Ajay to me. How to align interests. Since the role of CFO is very strategic in nature, alignment of interest is very crucial for success and growth of company. How do we mitigate this risk? Now, the question we are posed is from a company's point of view, not from a virtual CFO's point of view. That's my understanding. And thereby, the idea is indeed to try and remunerate the virtual CFO based on deliveries, which means you will say you can take a retainer of whatever number, which is just taking care of a basic bread and butter, but your key offtake will come only when the transaction happens, only when a specific deliverable has happened, through structures like sweat equity, to structures like ESOPs, to structure. So a virtual CFO is never an employee. So obviously he will get a sweat equity, or he'll get a percentage of a given transaction. So that's how the risks are mitigated, by keeping the fixed payouts as minimum as possible, and allowing the upside a lot to be paid. That's how, from a company's point of view. From a virtual CFO practitioner's point of view, you need to be mindful that you need to take care of your base costs. Thereby, your minimum retainer should not be below your base costs, and thereby allow all gains to come subsequently. But it is sure worthwhile to wait that kind of time and put that kind of efforts. Competitor risk. What happens if virtual CFO works for two different companies? This is a interesting question in terms of if works for two different companies. Any reasonable minded entrepreneur will not onboard. He will have a non-compete clause, and thereby he will restrain you from working for similar companies, and that's a fair expectation, and there's no reason why someone should go and solicit alternatives if you're doing a proper full-fledged virtual CFO service. I again want to emphasize here, when I say virtual CFO, it is the whole gamut which I presented in the earlier slide. If you're only doing accounting outsourcing, there is no reason to give exclusivity. It's called exclusivity. No reason to give exclusivity. But if you're not doing only accounting and doing the whole gamut, exclusivity is the primary requirement of a client. It's a fair requirement, and thereby it should be given, because a lot at stake. CFO generally authorized signatory for the companies and could be on board. Do you expect virtual CFO to be the same? The answer here is it is defined by your engagement terms. A virtual CFO can sit on the board also as director of finance, no issues. But that is why you need to be understanding what are the risks that you are taking. Now, please understand, it's very great to sit on a board and feel that you're on a board, board of director, but the risks are magnified. massively magnified. If people want to understand the risks of being on a director as a director on the board of Indian company, I would strongly recommend you can take a masterclass which is done by Institute of Directors in India. It gives you a good sense. Having said that, we also know how Republic India Media Network, all the key guys are behind the bars. We also know multiple such cases. So I would strongly recommend, while there's no restriction to not be on the board, but a virtual CFO should not take that position and maintain his independence from the board would be my recommendation. How is the scope of work different from full-time CFO versus virtual CFO? Full-time CFO is employee, thereby he can't have any other engagements. Scope of work is completely defined by it's again it's a negotiation which you're doing with clients. So virtual CFO has the flexibility that if he knows client cannot spend more than 200,000 rupees a month on finance improvement or function, then obviously what to first prioritize later on, so on and so forth, the virtual CFO can guide and implement accordingly. A full-time CFO is expected to deliver the whole damn gamut every time, every month, because he's signing off on quarterly reports or so on and so forth. So that's the difference, that scope in virtual CFO can be flexible and meandered through, whereas virtual full-time CFO generally is expected to deliver through and through, irrespective of budgetary constraints. That was all strategic questions that I thought and I classified that way. Let me quickly. Is it okay to outshoot to 8 o'clock, Ajay and Sharmila and Natasha? If you want to give me guidance when you want me to.
We do have some time.
Yeah, so I will possibly take another 5 minutes to finish this
We
question, and then we can pick up any further questions if they are. But then I'll quickly finish this. Will the accounting team be virtual too? The answer is completely up to the virtual CFO. If he believes he has the bandwidth and the capability to deliver, then accounting team can also be virtual. Many clients do virtual accounting teams for sure. I can tell you it's a big business, but we need to be mindful that it is highly people intensive. So if you're going to run a shop of virtual CFO, which also provides accounting, then you need to be very conscious that there is business continuity planning, because attrition is a big question. You need to be very conscious about data integrity and security, which is a big question, because employees today are very prone. Human beings by nature are politicking, and thereby we need to be very conscious. That's the next question. And finally, accounting team, thereby capable, because you're going to add layers, there's a continuous fixed cost that you're sitting on. Unless you're amplifying the utility or utilization rate of this team, your margins gets muted, and thereby if you are wanting to play the pure virtual finance role, you will get surely distracted, and your personal yields will come down, which is what you'll have to be conscious about. Very surely, if you're running an accounting team, it gives you annuity streams of income. Your regular periodic income stream month on month comes to you. But if you look at yields, that recovery rate on your time, it will start coming down, because you have to spend a lot of time on managing those teams also. That's the pros and cons. Navigating unexpected circumstances. What role does a virtual CFO play in crisis? Wow, this is one of the key things that more or less most of the time I can again tell you out of my experiences. SME company or a startup or otherwise try and come to a virtual CFO specialist only when already they are neck deep in water. They're just about to drown. So you're always playing a crisis game only, and thereby so that's how you will have to visualize yourself in that role only, that any virtual CFO for the mid-market space, for the early startup phase, is doing a crisis only. And let me here specify further. Don't think that because a company is funded by someone in big time doesn't mean they don't have crisis. There are so for example, housing.com, it was well funded, there was a crisis, the CFO was also obviously into trouble. WeWorks, wow, was anyone funded more than WeWorks? No, the answer is clear no. Did they have massive problems? The answer is still yes, the CFO also had a problem. So what I'm trying to say is the funding element shouldn't be taken as consideration for crisis or no crisis. Every early stage fund company, mid-market company, only in crisis do they finally come up to virtual CFO, because their idea is specialist intervention and getting the solutions done. Backup plan, I've already spoken to you in the first question that the backup plan is very critical if you're delivering a process. If you're delivering a very highly specialized individual professional services, you are your only backup plan. Ensure yourself lead a good lifestyle. That's about it. And pick up your clients well. Don't hurry into picking up clients if you're wanting to do the business yourself, because as I said, time is an inventory. Your basic retainers will never be super exciting. It will be very elementary to cover your costs. So if you pick up the wrong clients, you'll put in a lot of hours, you will not have recovery. So backup plan is only to have a portfolio of 3 or 4 different clients and whose buying you have, and then work along with them and help them build and make your money. That's so one is have a healthy lifestyle, the other is diversify at least 3 or 4. Beyond that, very difficult, trust me when I say more than 3-4 clients. If you're doing virtual CFO service in its true sense, amazingly difficult, or you have to have someone good in second line or as a partner coming in to deliver that service. How do they learn from regulatory changes if there are any sudden changes? On the That's why virtual CFO has to be on the fly, picking up and continuously delivering. There is no other way, and that is why I love CA. As a CA, we were really taken through the grills, and the number of hours we would have put in our articleship days to get through an audit, to deliver reports, on and so forth. Crazy hours we used to do as articles, and that is possibly standing in good stead. And that's why I believe CAs are a good fit to be able to deliver that role. What role is beyond the general CFO? That do they offer a connection? I've already answered this question by saying typically a virtual CFO he adds value by connecting to investor forums. If he cannot do, don't raise that expectation of the client. Otherwise, what happens is I've seen this in pitches again. Many virtual CFOs pitch saying that they'll introduce him to this person, that person, so on. So the entrepreneur is very enamored, and if the delivery doesn't happen, obviously the relationship goes sour. So my typical submission to every entrepreneur who's want to do a VCFO is, if you don't have that network, don't pitch it. Say that we'll find a solution, and the client is still ready. The client is still ready. So go down that route. It works out better. How does virtual CFO communicate with clients? Like anyone else, and generally it's largely mails. Many of the clients again prefer to have dedicated mails. For example, most of my clients will give me a dedicated mailbox in their server, in their domain, so that the secrecy and the sanctity of communication is maintained. Obviously, whether I speak daily, weekly, monthly, is all very specific to client requirement. For again, to give an example, if I am in a highly driven, charged up business environment, for example, let's say the modern day ed tech, or education tech, that's the word that I'm trying to use. Then I have to be speaking to as a virtual CFO, to speak to my client on a daily basis to say what are the enrollments today, what are the cash flows today, how is the cash flow panning out, so on and so forth. So the expectation might be a daily conversation. But if it's fairly standard business model being delivered once in a week, once in a fortnight, once in a month, once in a month also sometimes suffices. It is largely related to the client's business situation. For example, if in transactions, is in fundraising, it could be daily hours of discussions. When we closed off, as one of my clients, we closed off deal with Larsen & Toubro Infotech, the conversations used to run for hours, because you are discussing and advising clients on numerous issues around transactions. Valuation being the simplistic, warranties, indemnities, the whole gamut. So you're advising clients, so it can be very intense and continuous. Who's responsible for record management, bookkeeping? So here is what you have to be very careful about. If you are running a full-fledged virtual CFO shop from accounting onwards to the finance function that we spoke about, then obviously the virtual CFO is responsible. Else, if you believe you don't want to get into maintaining that gamut, then you can restrain your contract with the client, saying that your team is responsible, I'll guide, I will do an oversight, and I will sign off at the end, but primary responsibility resides with the team. That also is possible. It works out beautifully if you're not running a full-fledged shop. So your contract has to be very clear, and increasingly Indian contract enforcement is getting better. So there was a time, how does it matter, go to court and run for years was a challenge. Nowadays contract enforcement is getting better. So it is very important that in your virtual CFO contract, you do capture this essence and protect yourself by, if you're not running a full shop, eliminate this, or don't warrant that it will be your requirement. Data security, confidentiality, risk controls. Yeah, as I said, this is completely an operational question, and you will have to, if you have the relevant expertise, put it in your contract. If you don't have, just say this is not your domain, or this is not under your gamut. Whoever is the other person responsible in the organization for these specific aspects has to be responsible. So again, stick to your strengths, and it works beautifully, would be my broader, larger statement or submission to this forum. With that, I've taken care of all the questions which was here. Have I anything left? Natasha, and I would request you to also guide me if you are specific about, because there are some comments and so on and so forth, and we are already overshot the time. But I'm scrolling down the questions that you are. So the last question, which has been here by Chinmoy, is do you have any example wherein you can't meet your client physically? There's never you can't meet for sure. It doesn't make sense. But I can tell you for sure, the same client that I'm talking about, who was bought over by Larsen Toubro Infotech, I didn't meet him until, which means I was serving him for about 6-7 months. He's based out of Bangalore, I'm based out of Mumbai. I was serving him for 6-7 months, but I never met him face to face. I met him face to face only when a term sheet for a transaction was signed at that stage. So what I'm trying to say is, even such engagements where you're working thick with client on transactions also can be done virtually. That is what I'm trying to emphasize. It's all about your buying. It's all about how you end up demonstrating your conviction on the client and his business model. It can all happen. Virtual CFO is an option for those who risk covers in finance professionals who not prefer. No, I would clearly say no, that virtual, it's not about being risk averse. Virtual CFO is primarily a solution for business guys who can't afford a good finance function, and thereby they're looking out for a solution, because virtual CFO, most of the contracts will be structured such that the standard fixed cost is lower. The whole world is moving to variable costs. So a virtual CFO allows the business to have a variable finance administration costs that have no second best, and thereby the cost is dependent on some deliverables, so the business is able to afford better. If again, sounding audacious, but the intent is not to do that. Intent is only demonstrate, if someone has to pay me my full market remuneration to hire me as a CFO at a startup level, not do it. Just to give you some indication on numbers, an average reasonable CFO earns about 50 to 60 lakhs a year in India, right? An average reasonable CFO, 50 to 60 lakhs a year in India. If you're going to tell a startup pay that kind of money, they just can't. So what would a virtual CFO do? He will say, okay, end up paying 10, 12, 15 lakh rupees a year, or a lakh or a month retainer, or a lakh and 25 retainer, and take stakes in the company for delivery and enjoy once the upside is done. And the amplification can be dramatic. So I'm just trying to say that someone, if they have to afford a good finance professional, they can't pay cash cost upfront. The only way is a virtual CFO route, where they're able to bleed in good professionals, and they're able to gain out of it and grow, and thereby everyone in the whole process gains. One more question that I think I am taking here is, how is business in, if virtual CFO is 1% team, how is business? So where I would want to again specify, when I say virtual CFO is 1% team, which means key strategic finance discussion is always going to be person dependent. Let's have no second thoughts. If it is finance strategy, if it's financial negotiation, it is very, very independent driven. It's an independent professional service. If I have to go back to DTAA clauses, right? So there's a dependent professional service, independent different. So it's a very personalized professional service, financial strategy, negotiation, structuring. No two people will come up with the same idea. So thereby their continuity is very difficult to maintain, and it should not be even targeted. The business should identify the right advisor with whom the mindset of the promoter matches, and thereby the risk awareness or of the strategy or otherwise comes into picture. So what can continuity be maintained on? Continuity can be only maintained on the process side of the virtual CFO business, which is accounting, periodic reporting to board. Those are process driven. So that can their business continuity should be already factored in thereby, which means it is the whole process is done, it is done templatized, there are checklists, there are processes, there are maker, checker, the typical jing bang should be there, but those are all process dependent, and thereby their business continuity will be there. But a core finance can never have business continuity, because it's very, very person dependent. So charges will be on hourly basis. Where fundraising is happening, the answer is a clear no. Fundraising can go for eternity sometimes. So typically what happens in fundraising, which is investment banking conversation, it's not a virtual CFO conversation, but still that the question is asked. Typically in fundraising or investment banking transaction, there's a typical retainer which is taken, which should be a couple of lakhs, or depending upon the size, nature, and complexity of business, couple of lakhs. And completely the whole upside is only when the deal is closed, which means the jingle in the bank happens for the client. A percentage of that is paid out. That's how typically it is structured. So that's one. It is in the case of multiple clients, how many hours on average do you devote each day? So I get this question: how much on average? How do you project number of hours? Person dependent professional services of virtual CFO, you just can't estimate. It can go for, it can sometimes become 16 hours a day, 20 hours a day. Just to again give you an indication, one of my clients, two of my clients were simultaneously looking at a transaction. I spent about 12 hours on call with one transaction on a given day, and the other person with about 3 hours, 15 hours just on calls because virtual world. And the day continues that way. So very difficult to estimate. So what you have to essentially do is have your own visualization of what's your minimum monthly so-called a lifestyle expectation for a minimum monthly requirements. Pitch that as your retainer, and put everything else in as a upside based on deliveries. It works out beautifully because your basic lifestyle is taken care of. You are very self-assured. You are advising your client basis his benefits, which he sees through, and thereby he'll subscribe to whatever you advise. So is there some way to try and keep tab? So you cannot be a lawyer saying that the moment I call, put the clock on and say 1 hour and I charge you 2,000. It will not work in a virtual CFO. And lawyer, it will work. A virtual CFO, it will very difficult to work. And I don't think you should go down that route to charge on hourly. You should always charge on delivery. The client is happy, you are happy, the relationship is great. Next is, I think I've taken most of the questions. Yeah, so Natasha, please, it's already about 8. In India, it's about 8:15. I have 15 minutes more than what was allotted to me. So apologies for starting late, and thanks for being patient. But yeah, continue, Natasha. I would want to seek your guidance on how you want to proceed. Yeah.
Thank you. Thank you, sir, for that inspiring session. So I'll quickly present the vote of thanks. On behalf of the BCICI, I formally extend my gratitude to Mr. Jayaprakash for sharing his wonderful insights, our annual sponsor Tally, my fellow EXCOM members for the usual good support, and finally our beloved members for taking the time out of their weekend to attend, and especially for their patience at the beginning of the session. So we can now, Ajay, we can move to the quiz. You're on mute.
Yeah. So Jay Prakash ji, I think what we normally do is at the end of the session, we kind of, so I was intently listening to you because I had to make up the questions as it was going through. So what we have done is we have created a quiz out of, a lot of the content that you spoke about. So just to see the retainers, retention from the session for the members. So this is a good test. If you want to stay on, you can, it's just a fun thing. You can see how people have understood this thing.
I'm happy to be around. No issues always. And the mind is today, we have very, very short-term memory. So I can tell you, you ask me what I spoke can also be a challenge. So I will not want to respond on the questions you posted. So I will be a mute spectator.
So maybe if I got any of the questions or the answer wrong, you can intervene as well. So that is another side you can do. Okay. So I think our members possibly are now quite familiar. I am very impressed that still more than 115 people are there on line. So I think we can probably start with the Kahoot quiz. As most of you know, you can participate in this by either going to www.kahoot.it, or if you have an app, you can start typing the PIN number straight away. So membership number first and the first name, as that's the norm. So membership number first and the first name. So the entries are coming in. So I think it's quite good.
People have now become so used to the format.
Yeah, they've used to become format. I see somebody has just typed in 139,015. So if you just want to exit and just put back again the membership number along with the first name, because it helps for me to know the name as well.
Ajay, what is the criteria for members participating in this quiz if they've already won at least half a dozen times?
I found out that I have an option to remove members. So maybe suddenly if you get disconnected, maybe you'll get an indication.
On a lighter note, on lighter note, the rank holders in the CA institutes are the same through from foundation to final. So there are always such people who give us, who give an average student a difficult time.
Rohan, I think you have not put your membership number. Rohan, if you can just reconnect with your membership number. Because if the membership number is not there, we will not be able to validate. So therefore, it will be disqualified.
Stanamurthy sent me a direct message that he is just playing for fun. Ajay, you want to just note that.
So anybody playing for fun, if they win, just give the prize to next one.
There is a disclaimer from Stanu already. It's so untrue.
Yeah, mine is really trying to pull my leg.
Okay, so I'm surprised only 50, close to 50 is coming. I mean, although it's a good number because I see about 100 odd people there. But in maybe once we hit 50, I think I will start. Just give 1 or 2 people's time. So we have about 12 questions.
About 12 or 12 only, because you cannot put in fractions, my dear.
It's very difficult talking to people like this. They're very particular, so I have to be very careful with my language. So it is 12 questions, Kapilji.
And more so if it is the mentor of the month.
Exactly. So it's very difficult. Yes. So John, I don't know who's John. John with the no number is not really helpful.
He's John Doe.
Okay, so I think we'll probably start. Let's start now. So here comes the first question of the virtual CFO quiz. The first question is, who is the BCICI mentor of the month? I don't know if I remember somebody mentioned his name recently, but
yeah, I just heard Surendra Jain's video just yesterday, man.
Yeah, okay. There are 4 handsome gentlemen whose pictures are there on the page 4, so you
Mahesh
have a
is
difficult time.
right now.
Okay. So there are people who chose 2 and 1. So Kapilji, I will give their names to you. So this is the right answer. But let's see the fastest finger first. So it's Gaurav who's on the top. So that was a very easy one to start, I would say. So let's now go to the next question. CA Jayaprakash started his career with which of the following firms? If anybody bothered to look at his profile that was circulated,
Oh my! That is a very that is a very. Oh. I didn't realize my career will be at question.
No, it's like CA exam. No, you have to have some tough questions out of syllabus also. So I think these people 19 who selected, they must be working for BDO because they must have chosen for out of loyalty, I guess. But that's the correct answer. So I think, is that correct, Jayaprakash ji?
I didn't start my career there. It was my second. There was a firm called Ramesh Lakshman, which was primarily financial services, financial consulting. But yeah, in terms of a network partnership, large partnership, BDO, yes. And to be Indianized, Bharat, it is Hari Bhakti and Company in India. At that time, it was Hari Bhakti and Company.
Excellent. So now let's just see the leadership board now. So obviously that's led to some change. And as expected, BDO partner CA Samson is on the top. So I don't know whether he knew the answer or he just saw his firm's name there and he just selected the option. So, but in any case,
no, it's based on the CV.
Okay, I believe you, Sam. And somebody who's playing for fun is on the 3rd position, CS Tanu.
Yeah, winning is also fun.
Which of the following is something businesses are not exposed to? Is it multi-jurisdictional taxation, extremely long product cycles, increasing regulation, or international commercial contract terms? So this was a very prominent slide. I think probably one of the first slides that our speaker spoke on. Very good. I'm impressed with the level of answers. Jayaprakash, I think they're also looking at it. So the wording was there, except it long was replaced with short. I think businesses are now exposed to very extremely short product and business life cycle. So that was probably what was you mentioned. So now let's see if there's any change. Okay, there's not much change. Jonathan has come in, Vatsala is there, and Mani sir, as usual, in the top 5. Let's go to the next question. Which of the following is not a feature of CFO driving business results? Is it business partnering? Is it real-time advice, bean counter, or is it proactive? Excellent. I think that's probably a bit of a logical answer there as well. So let's see the position. So CA Sam has dropped off. Gaurav is back in the lead. Jonathan. So a lot of movements. So every position has changed. That's quite impressive. So let's just go to the next question. It's a multi-select. So you have to choose as many answers. Which main attributes are expected from a CFO by the board? So you have to click on the options and say submit. This is a bit tricky. So this was also there on one of the slides on the expectations from the board of the CFO. Very good. I think as you can see, there's a lot of right answers there. So let's see if there's any change in the position. Yes. So CA Money is all of a sudden in the top. Let's go to the next question quickly. White Hat Junior was acquired by Byju's for this is a test of whether you were listening to the stories that our speaker was referring to in terms of valuation. Excellent. I think he mentioned about the business valued 11 million, which was ultimately purchased for a value of 300 million. Is that correct, JP?
Yeah, that's correct. That's correct. 300 million.
Yes. Okay, excellent.
Anyone would cool to be there, right? So
so CA Vatsala is now on the top. Naresh Chawla and Rajesh Nair, I guess. Yeah, very good. So let's go to the question number 7. Which regional council recently came out with a publication on virtual CFO services? Is it SIRC? Is it WIRC, NIRC, EIRC? The picture that you see there is clipped from that cover page of that particular publication. And hopefully I will be circulating this after the session today. So I think it's quite a nice read, I would guess. Again, very impressed. I think most of the people got it right. So it's WIRC. It's a nice piece of work. So Naresh has moved to the top. Rajesh, Mani sir, I don't know who's the second Rajesh now. Okay. Let's go to the next question. Question number 8. The new CEO of HDFC Bank is CA. Is it Sashidharan Jagadishan? Is it Aditya Puri? Is it Paresh Shuktankar or Deepak Parekh? The picture is getting unveiled. Okay, so I think Aditya Puri was just the previous CEO. Recently, Mr. CA Shashidharan Jagadishan took over as the CEO of HDFC Bank, and I think our speaker referred to him specifically during his presentation. Right. So does that make any change? Maybe a couple of changes. Yes. Let's move to the question number 9 now. Which is the role of finance function in relation to decision making? What is the role rather? Is it to facilitate? Is it to constrain? Or is it to intervene? Or is it to override? What is the role of a finance function in relation to decision making? Excellent. Again, maybe a bit of a logical question as well. So 41 people got it right. Maybe, still we have one change in the position. CA Vatsala has moved up to the second position. Let's go to the question number 10. Which of the following is not a source of leads for virtual CFO services? not a source. So is it lawyers? Is it startup database website? Is it an incubating centers like IIT, or is it ICAI?
That question might verge on ethics question. Sorry, I'm sorry.
Why would you say that?
Somehow our institute is very averse to business development, and I don't know why. Very averse, and I think somewhere all of us as members will need to make institute start thinking a little differently. That business development is not a bad thing at all, and in these times, it's a reasonable thing to expect to do to survive.
Yeah.
Somehow that's the.
So I think, I think in any case, the ICI probably will focus on providing the tools and the abilities rather than actually providing business leads, I guess, which probably may not be in their lead. Yeah. So I guess 18 people got it right. So let's see if that makes any change in the position on the top. Not much, though there are 3 changes at the bottom. Okay, we come to the penultimate question. Which of the following is not a service provided by the virtual CFO? Not a service. Is it manage HR admin, fundraising, merger and acquisition, manage finance related IT systems? So which of them is not provided? I think people have gone with a bit of a logical thing. I think I'm the point number 2, fundraising was very prominently mentioned as one of the key functions of virtual CFO. But yeah, is that correct?
Yeah.
Perfect. So I think that that comes to the last question. So this is not related to today's session, but it's more related if you have been following our communication from the BCICI. So there is not much change. So let's come to the last question of this session. BCICI theme for the month of November is it Awaken the Mahatma I Knew? Is it Bharat? Is it health and well-being? Or is it illuminating the path of knowledge? The speed at which the answers are coming, I hope everybody gets it right. Excellent. Although the other 3 answers were the themes that we ran in the past 3 months. So it was August on Bharat, and we had Awaken the Mahatma in September. We had health and well-being in October, and November is dedicated to illuminating the path of knowledge. So I am happy that most of the people got it right. So now let's see the final position. So CA Gaurav is in the 3rd position. CA Vatsala is in the 2nd position, and let's see who the winner is. Is it CA Naresh Chawla? CA Naresh, you are there? Okay, so hopefully you found that interesting. That session was quite interesting, I guess. So although we had a bit of a late start, I think our speaker really engaged everybody once he came in. I think people were quite engaged with the line of questions and the clarification that were being sought. Thank you, Jay Prakash ji, again from my personal behalf. And I hope you had
always a pleasure and always a pleasure. Thank you so much. Thank you so much. Always a pleasure.
So CS Tanumurthy says, I hope Mahesh is happy. So thank you everybody for participating again in large numbers. So so have a good evening, whatever is left of it, and as we look forward to the work week. See you. Bye-bye.
Have a great evening. Thanks.
Thank you. Thanks a lot.